This is episode 1 of the QuantPy Insights, where we're trying to get on professionals like yourself, Octavio, where we can understand what it's like actually working as a quant within the industry. So obviously, you've described yourself here as you've worked in the consulting industry in Spain, Germany, and the US, mainly as a derivative quant and doing market risk. Now you're in methodology and you're doing all types of models at for investment banking at Santander. Would you be able to put a little bit of perspective over your background and your career journey to date?
Sure. I am from Argentina. I study economics in Argentina, a kind of economics also, but more oriented math. And I had a good experience in this because I was supposed to work like everyone that study economy that is, in stock market, just like in valuation or whatever. And I had a trip to China, and when I was in Shanghai, like 7 years ago, I saw all that technology, all that innovation. I say myself, okay, the world goes to that direction. Machine learning models. I need to understand the roots and the causes of everything. That's what maybe my main concern was. Okay, I can't be just at the top. I need to understand the root, and if I understand the models, maybe I understand the whole problem and get a solution, or maybe a partial solution. But it was my first question was, okay, how can I understand how this finance world works? No?
And was that an experience? In which country were you to have that experience?
That was in China. It was in
Wow.
China. Yeah, that was in China. I
What year was
traveled
that?
2016.
Excellent. During
16.
your study, obviously,
Just
you're
finished.
just finished.
Just finished my studies. I went there because I was studying in university a lot about China. China is a very interesting country for any economist. And I wanted to visit China. I went to China, and it was like mind blowing. It's amazing for anyone that could go. China is very different, like than Argentina, of course, but also than Europe or maybe the Occidental side of the world. And it's so different that it's so richful. It's an amazing experience because everything is different, different culture, different religion, different movement, different vibe in the city, and
Yeah.
we should learn about that. And they had maybe their culture is more biased up to the quantitative skills than Europe or maybe than Latin America. So they are more quant skill, and of course that's why we have in the industry a lot of Chinese, Asian, or Indian people, a lot, because they are really good at math. They're really good at programming, and they are really good focusing. Something that is very very useful in the quant world, that is to get focused in a problem and to get the solution to the problem.
So that could be, that could just be background and the way the education systems work in different
Yeah.
countries. I can definitely speak to that. The education system I've experienced a little bit in England at top universities at Imperial College London, just doing a 1 year exchange program while I was studying chemical engineering, and it was apples and oranges compared to what I was learning at the University of Queensland in Australia. So look, that's really interesting. So you've come out of your bachelor's degree and you've gone and you've had this incredible experience in China, and you've seen a lot of things. You're asking a lot of questions about, I want to understand this. This is where my motivations come in. What did you do after that? How did you follow that curiosity?
I enrolled in a master degree in quantitative finance. In Spain, I moved to Spain. In Spain, there are maybe two big master degrees in two different universities. I had one of that was another very great experience because it's very intensive in mathematics, in, let's say, in Python or R or Java or C++ in programming skills, and a little bit of finance. To be honest, in this world, you need to know program and math. The finance
Yeah.
part is important, but let's say a 5% in comparison to the to the to other skills. I did a master, and during the master I get to a big four, and then from the big four I continue working in the consultancy industry up to now that I'm in the bank.
And so you were working as a quantitative consultant for one of the big four
Yes,
institutions. Yeah.
yes. I work as a quant. First, I start in the audit side. That it was a very good experience because the big four has maybe two big lines, assurance and consultants. And in assurance, we need to audit all the derivatives. So we need to do the pricing of all the derivatives.
Yeah.
And that's very challenged because you need to really match the result at the 4th, 5 decimal, So you need the skill. It's very challenging because when someone works in the college, or let's say in the early stage of your professional career, you kind of try to match a result, but if it's, let's say 1% up or down, it's okay. But when you are in the industry, each decimal is money. So you need to be really precise and accurate in the result. That's, let's say, a training in this world to be really accurate.
Wow. So as part of that consulting, who were your clients that you were assisting build these financial models for and valuation models?
A lot of banks, a lot of companies, a lot of insurance, different kind of companies. For example, remember pizza companies that had swaps.
Wow.
It was really, really amazing. Here in Spain, you have a very big pizza restaurant that I always eat in the street. That it was my clients because they have some swaps and they need to have the pricing. It was amazing.
Incredible.
All kind of, yes, deepest the market, you have more clients. Every kind of corporate, insurance, banks, whatever, financial companies, all
So
use derivatives.
you obviously had some really good experience over these couple of years. What do you think? So, in terms of being able to be at a consulting firm as a quant and being able to see all these different businesses and price all these different products, what type of skills do you think that you picked up along the way, maybe during your Masters of Mathematical Finance, that actually assisted you in doing the on-job requirement, everything that your boss required you to do? What really helped you?
I think that question has two different stages. That is, if you divide your career life in your beginning and then your medium career life. At the beginning of a quant life, you need to be good programming.
Yeah. Okay.
You need
Programming
to be
key.
good programming because, of course, you will need mathematics, but you will need to be good at programming because when you are a junior or maybe when you are an intern, you need to get some stuff automated or you need to program some codes. So that's what you need at the first instance. Then, of course, you will need mathematics. Depending on each of the portfolio, if you are more focused on trading side, in the trading book, you need to know a lot of stochastic calculus. That's maybe the most difficult, but is also the same. Is the root of how we model the path on the stocks or any underlying. So when you need to understand at least stochastic calculus. If you're not going to model, you need to understand or to be able to read a paper to understand how a volatility surface is calibrated. You need to understand the models. But it's maybe I remember when I was starting in this industry that I was like very confused or maybe upset because I didn't know anything, and maybe the first thing that you think that you should know about anything, and this world is very difficult. It's very complex. You need to understand the things in a very deep way, and there is a time for that. You need to be evolving.
Okay, so you're actually
Knowledge.
recommending that if people start off as more generalists and they focus as a young professional on the actual coding implementation and being able to do things and impress your boss, that is going to mean a lot more. And then you're going to get technical and involved into deep projects as you develop through your career. Is that?
By far, because you will have a senior with you.
Yes.
And that senior will know more mathematics than you, or maybe will know more about how to apply that mathematics.
Okay.
Maybe the background here all are like engineers or mathematics or physics, and they all know mathematics, but maybe they do not know how to apply that mathematics or to model that mathematics. So your senior will be able to say, okay, for this model we need to do a Markov chain. For this model we need to do whatever. That's practice. That's to understand the products and which mathematical methodology we need to use for each problem. Yeah.
Oh, that's fantastic. And so in terms of like these critical concepts and methodologies that you've actually used in your role, especially during those times that you're related to market risk and derivative pricing during your consulting time, what was the most useful skill set that you could apply?
That's a very good question. Well, you will need stochastic calculus by far.
Stochastic calculus.
Yes,
And this is something that you did pick up during your
yeah,
masters.
yeah,
But
yeah.
did you find, at least for me, when I was going through my master's in mathematical finance, half the time you get more interested in the subject when you're actually applying it on the job than at the time when you were actually learning the thing during your master's program. So I found that in my own work, that whenever then I'm delving into a new problem and I have exposure to the topic, so then I know which resources that I can go to or what type of math that I need. But then I'm going back to my old textbooks to revisit the models and learn more. Is that a similar approach to what you've done?
It's exactly the same approach. I remember that we had in the office, we have all the main books, the main Bibles of this world, Wilmot, Hull, uh, all the Bibles of stochastic calculus, continuous or discrete time models, whatever. And we are always looking at this model because it's really difficult to remember of the model. Let's say 1 week ago here at the bank, front office came with a kind of project to simulate, let's say, the collateral of a model, that it should follow a given path and then have a jump in distribution. And of course, I forget how to do that. So I went back to the books and I started reading all the mathematical methodology, continuous time, to how to model the Merton jump, whatever.
Jump models.
Yes, yeah, model. So I think it's almost impossible to remember all the models, but you have the books, you have ChatGPT. If you understand the framework,
yes,
you could go to the bibliography and do this, of course.
No, that's excellent, and I think really good advice for listeners to follow, especially when they're starting off in their career. So as your roles obviously evolved and you've transitioned throughout your career, now you're covering various models at your new job at Santander. You're looking at all these different models and methodologies across different investment banking applications. How different is that now, where you're taking a high level approach, and I assume maybe you have a team of analysts that you're helping delegate work to. How does the quantitative role change now, and do you still get dug into the tools?
A lot, because maybe when I change from consultancy to the bank industry, I also changed to credit, and credit is very difficult in the market. In credit, you use more econometric tools, statistical tools. That is quite different from market risk. It's a different kind of mathematics. It's more statistics. And also because in my bank, we are really strong in the credit side. You're just starting, for example, trying to understand the risk of a titulization. That's very complex. So in that world, or CVA, right? XVA, we're also trying to understand counterparty risk, but it's the same. You have a tools in your quant toolbox. Okay, I know simulation. I know how to do a Monte Carlo simulation. Okay, so maybe I could use Monte Carlo to do basic check. With basic check, I simulate, the expected default from my portfolio. So when you have a toolbox, it's amazing. For me, the best thing that you can do in this world to be in lab with the problems and to get solutions, because every day will be different, to be honest, and you need to be the kind of person in lab to solve problems.
Yes, and I think we were just speaking about that before, and just about some of the challenges, but also then opportunities that you have working at such a big bank and having to navigate some of those problems. You said one of the significant problems is even just when you get dedicated a new model that has to be developed on your desk. That's actually a new line of the business that needs to be formed. And therefore, you're having to interact with front office, you're having to interact with back office. How is that? Is that one of the more challenging aspects of your role?
That's the main challenge of the role by far. The easiest way of my job is to do the model, to create a model. It's the easiest way.
Because that's the fun part, right? That's the bit where you're getting stuck in.
Yes, that's the fun part, because when you create a model, you spend some time thinking about how to create a model, how this will behave, etc. But then you have your user that say, okay, I don't like the kind of model because this value will not fit well for me. And then you have different stakeholders, and you need to connect each stakeholder with your model and to get results. And each stakeholder in a big organization should agree with the results of your model. And your models creates a discipline, because let's say we're in a bank, okay? The bank, the main business of a bank is to, let's say, lend money, no? To develop new business lines. With that premise, we need to be just behind of them, trying to give a discipline and trying to provide accurate models to accurately measure the risk, accurately measure how much line consumption we will have, how much capital will we need to having provisions or whatever. So our model size is really critical.
And
Of course,
it's also obligatory because of regulation. So obviously, you know, but it is, as you've kind of indicated, it sounds like this is more of a secondary, let's tick the box to the regulators, why we have these risk models in place, keep them
that's
happy.
right.
Yeah.
That's right. That's right. That, well, so I think that of course always is a regulatory side, but it's a different step. First of all, you develop a model, and then you fit your model with the regulatory, with the guidelines of the regulatory framework and whatever. But in the first instance, you try to be creative. Okay, we have this problem. Let's be creative with the front office. Okay, we could provide this and this models, and then once we have this, okay, let's go with the regulator. They show our model. We need to be very precise in our model and to be also responsible with our risk, because how we manage the risk is how the people will be as confident with us. You know? If they trust with us, because we have very good models and because we are really good, and I believe that we are really good estimating risk. You know, but that's kind of incentives. We have front office that try to increase the business line, and we are risk. We are trying to measure accurately, and to the front office, okay, up to here you can do business. Then it's our side, you know. But philosophically, the model is the pillar of a new business line. Yeah.
Oh, well, that makes a lot of sense. So that's the challenges aspect. I guess from your perspective, what opportunities do those kind of challenges present for people who want to start and they want to understand those relationships and they want to get going in their career and potentially make it to where you have at a bank like that? How can they navigate those challenges? What are the opportunities for new people coming into this established banking system where the practices are like that for the quant, where it's a secondary consideration?
Well, they need to understand the quant part is just the beginning of this, you know, of this world. We of course we more focus on how we create the model, but we will also need to understand how a bank works. Or the same when you are a consultant. When you're a consultant, your client is your bank or your financial company. And you are creating a model, but you need to understand how that model fits your clients. No, it's like when you go with your car to the mechanic, you will need to be very clear with him of how do you want to fix your car, because if not, no, it
He
will
might
not have.
overcharge you for your services. You might get a pair of new
Yeah,
windscreen wipers.
that's correct. That's correct.
Yeah.
And our industry is really in an inflection point, because all these increasing AI technologies. I don't know how this will continue or how this will evolve in the time, but it's really powerful.
Do you think that that's a challenge and for a big bank to adopt new AI tools, for example, robo advising for clients and things like that? Is it a large challenge, but is it also an opportunity where you're at?
That's correct, because we always have two sides, the regulatory and the economic side. In the regulatory side, the regulator up to now is not very comfortable with the machine learning models because it's a black box. And you need to understand what is doing your model. You know, for example, let's say a really easy methodology that is a logistic regression to predict 1 or 0.
Sure.
That's really used, and this really powerful. But it was invented to be done with a pencil, you know. Like we are still using the same model, but it's really powerful. So the regulator can understand that model. We're trying to predict bad or good instead of default or no default, and that's correct. But in a machine learning model, is a kind of black box in which you give a parameters. They say how many parameters will be in your model because of the each, I don't know, grid search or whatever, and then how that will give to you a final decision. And that's a black box, and that's, let's say, up to now is not the preferable solution for the regulator. But maybe in the future, yes, maybe, or maybe also our challenge as a quant is to try to understand really how these models work. And I think
Yeah.
that a lot of people use machine learning, but they don't understand how they work.
So I can kind of think of in your section there with credit risk and so actual valuation of credit party risk, just understanding that when you are modeling it from a portfolio approach, just having a non-transient matrix, which has been traditionally done and causes a lot of issues. I guess novel techniques of the likes of machine learning, where you're not just doing simple regression over a period of time to get your coefficients to this transition
Yeah.
matrix, to actually be coming up with a model that's maybe transient and has different regime switching. I assume that there are some great modeling techniques. What opportunities do you see there specifically in your field within that technical detail of modeling credit party counter risk?
I see a lot in the, let's say, in the high default portfolio. Let's say, for example, credit cards debt or whatever. Whatever portfolio that has a lot of homogeneity of a lot of debtor and very homogeneous whatever, we could use machine learning. Also in the front office quant side, there's a lot of potential in using machine learning to stock prediction or whatever this word that I know in your channel you promote a lot of this. There's a big opportunity there in the front office, in the market side, because that is the economic side,
Yeah,
it's like
the
a straight
business making
line
side.
business making, and yes, that's correct. This is very different. um but that's one, let's say, one challenge. And the second one, that is one that I'm working currently, is the ESG.
Oh yes.
The ESG risk. I am working actually creating a model. All the banks are working this line to be more responsible. And the climate change issues, the environmental, the social issues are really difficult to model. You need to be very creative. That's something that they mentioned, but in this job, you need to be really creative. You need to read a lot, not only mathematics only, sorry, not only mathematics, also you need to understand the problem. Let's say in climate change risk, you need to understand what you are modeling. And that's nothing about mathematics or about what I learned in the master, that is stochastic
Finance.
calculus applies for derivative, whatever. Is okay, I have this issue. How with the vendors, you have a lot of external vendors in the industry like S&P, MSCI, whatever. You have a lot of each. Well, all these that are, let's say, are the same. You have a lot of vendors that provide to you data, but what do you do with that data about climate change? How do you model? How do you create, let's say, ratings? If you need to increase your business with a client that is not that does not comply with the ESG requirement or with the taxonomies with the region, what happened? How do you create a model? It's very difficult, and you need to really be creative.
I
Uh,
guess this is the kind of thing that, I mean, it's just like with counterparty risk when you're assigning based on your qualitative factors, counterparty risk with certain individuals, much the same as Fitch or Moody would do, then you can really upset your counterparty. And you can end up, by causing them, a grievance in kind of that threshold for the variation margin. And I assume that will be the new topic of conversation with this ESG stuff. If you're having to assign a factor to each investment project, to each collaborator,
yeah,
potential business partner, if you're having to come up with an ESG metric and decisions are being made, oh well, we can't invest with you because you're polluting too much CO2 with your projects. I guess that's going to be the new trade-off.
for sure. That's the typical admission problem, which do we admit that client or not? In the bank, you have that's maybe one of the main important roles in the risk side. That is, okay, do we admit this client or not? Right?
Yeah.
Depending on it, we have a lot of factors. We of course we study very with the companies and etc. But the ESG is really really important, and we are in that case we have the commonly frequently named data problem, in which we don't have enough data. That is something that we also need to understand as a quant, and not always we have data. Not always we are dealing with stocks or with options that are
Yeah.
very liquid and we have data. When we don't have data, which kind of mathematics do we use? We use non-parametric mathematics, we use parametric, what is the best approach to do? In ESG, not all the companies make disclosure of the information. Maybe they don't have enough incentives. Maybe yes, but or maybe don't yet. So that's the data problem is very important in our job, and we need to understand which methods should we use that are more accurate to estimate this risk. Yes.
And see, and that's where I guess just looping back to what you said before about having the right framework and learning the right frameworks to approach problems with, and just having a problem solving approach. So, for example, in my engineering degree, we learned how to do bottom up. Like the Elon Musk approach, first principles. So that's kind of how ESG would be handled from a chemical engineer. They'd start drawing a bunch of boxes around processes and say what's going in, what's going out, doing carbon dioxide balances and all that. So I guess those frameworks and skills are really important to pick up along the way. And I guess moving into that, what advice do you have for aspiring quantitative analysts? What skills and qualifications do you believe are essential for someone aiming to become a successful derivative quant, market risk consultant, quantitative analyst?
Well, I know quite good courses in QuantPy. In the QuantPy, of course, your courses are by far very recommended. But nowadays we have a lot of offer. That's really great. Let's say books. We have some Bibles that maybe they're really different to.
So you've said John C. Hull you referenced before.
John C. Hull, yes, of course. Wilmot. I don't remember now the name. I saw a video of you. I have in my house the two little books that are blue about stochastic calculus in discrete and continuous model, times model. I forget
Yes.
the author. Depending in XPA, you have also some Bibles. To have some Bibles to refer in each case.
Yeah.
But
And I guess from those resources, what are you really picking up as is it the framework, because as we said, we can use them as references for specific problems, but the tool sets that you take away, like being able to understand probability and statistics, and that things aren't just a point value at risk, there's a probability there, or understanding Monte Carlo simulation. What do you think?
For sure. For me, how I work is, I think that in my head, I have really a toolbox in which I know which kind of algebra I need to apply. If I need to estimate different states, for example, I need to use a Markov chain in this scenario, whatever. If I need to do some regression, which kind of linear or non-linear regression I have in my toolbox in my head, and in which case each one could fit or not. If we talk about calculus, of course, you will need to know multivariate calculus, but let's I think we need to understand very good the basics. Algebra, calculus of one variable, calculus of two or more variables. Sorry, two variables and multivariable calculus. And then algebra. If you know these three, algebra, calculus, and probability and statistics, you're good.
Yeah, you're going to be good for a career.
That's the pillars. That's the pillar, and it's not too much. If you study, let's say, calculus, the famous book about calculus that's called Calculus.
Yeah.
If you study from also algebra, there's a very good from, I think most I am really very terrible with the names, but well, there's a very good, like it's called Linear Algebra Well Done, I think. It's a really good book about algebra. In probability, Versica, that is an MIT professor of probability, is really good. Or for Ross, if you know that books, you are really good.
Excellent.
Then of course you will need to understand how to do a Monte Carlo simulation in finance, but you need these basics. The same in Python. You will need Python, but there is some level in which the banks has another type of programming language like C++ or C# or C. Why? Because maybe at the past, maybe of course they are better, but maybe also because sometimes you program in the language that your boss knows and not in the language that you should, that the industry goes. Not all the banks use Python. Why? Maybe because the boss that is in that team know R and prefer R. So you will need to adapt to R or to SAS, or to C++ or to COBOL. But if you know how to program and if you know the logical of how to program, you're good. You're good to continue. It's just to do, let's say, some courses and to be updated with the last news. But you're good.
Oh, that's really helpful. I guess for those books that you've recommended there, we might put links down in the description. I'll get you to send through the ones that you think are really valuable, so our listeners can help.
Sure.
And I guess, the other side of this is career progression. So, as someone who has been able to, transition from a market risk consulting position where you're looking at derivative valuation and portfolio valuations for front office, to then transitioning now to credit risk and being more in a management type position with a team. Can you share some insights on that transition and kind of tools, the things that helped you adjust to the new role and just some advice for people who are young professionals in their careers who want to progress and move forward their career in quantitative finance?
Yes. So my first recommendation is, again, love to solve problems. You will need to be the kind of person that love to solve problems, because when you move from market to credit, of course, you don't know nothing about credit. That's the reality. When I moved to this position was, okay, I'm new. I need to study my free time credit. But as I had in my toolbox probability, algebra, calculus, it was easier for me. Also, of course, I did a master, whatever, but I had in my head a toolbox. So, okay, I had these tools. I just need to refresh these tools. So if you move to market or to credit, if you know the base, then you will need to be the kind of person that want to make a lot of errors. I mean, in this job, the error is on my side, because when I have, like, in my position, actually I am every day trying to solve problems that doesn't have a solution. Okay, when I was an audit, I was trying to price an option with barrier or whatever, but you know that if you just do a simulation and if you really are good when you parameterize very good the barriers, or let's say if the strikes, instead of being a fixed strike, you have a sticky strike, or you have the average of strikes, or whatever, the more complex, but you know that you need to converge to a market value because you are using market inputs, volatility, the dividend yield, whatever. There are some problems in the industry that doesn't have a solution. So you need to be creative and you need to know that you are going to make a lot of errors. Errors, I mean, that will not be good for your boss, but it's okay. I will give you tomorrow another model. And that's how you invent new things.
Yeah.
That's, I think, sorry. Yeah.
Being able to take on those new projects and being able to progress them and take ownership over them, is that being someone who's willing to take risks and learn. You're saying that that's going to get you
for
far
life
in your career. Yeah.
For life and for career. Yes.
Okay.
We need
Excellent.
to take risk and to, we need to also enjoy this job. And we are like inventors. We are always trying to invent something new, and you need to try different alternatives. Some ones are going to be really good, some ones not. Maybe at the average, you will be okay. But
Fantastic.
Of course, yeah. I think that's for me. That's always worked. That I was really proactive. I was always trying to think about different solutions, but new solution. And there's kind of trade-off here that is for me really important in life. That is to, in this life we are always going to pass. So we need to do things that will keep forever. That's my mentality. I will create a model that will be at the bank once that I will not be here anymore. So we need to be very professional. We need to create models that are really well constructed. We really define really good the boundaries, the mathematics is well documented. If we create a good model, the model will be there forever. And this is really true. Unless something happens to change it, but at least for 10 years, the model will be in the bank. So if we are good creating models, and if we really are professional, our job will be in that place for a lot of time. Another job in this country, in this industry, not. If you are maybe in the markets, any day, every day, the things change. So it was your race and you start again in the day. But in this kind of job, you are creating new things that could be a lot of fun in your company. Yeah.
Well, that's really satisfying. Just to understand that in the banking world, I guess when most people hear the word quant, they're thinking they want to work in quantitative trading. They want to be doing derivatives, valuations, market making. They want to be on the front desk as a quantitative analyst. But that's a really interesting perspective, that if you are in the model development team and you are in a bank, you are creating something that's going to kind of last and be used for the entire duration of that business duration. And not only that, it's going to be something that's really durable, really robust. And like you're saying, the model validation piece that goes around it, the model validation that goes around it, and the documentation is incredibly, or sounds like it's incredibly rigorous. So
that's correct. We are in the quant industry. We have a lot of different roles. It could be validation, could be audit. It could be also methodology team. It could be a quants. It could be trader. That's a lot of traders nowadays that are really quants.
Yeah,
that are really good at the mathematics, and maybe they were quants in the past, and now they and they pass to be a trader. So we are in every place. The good thing is that if you know mathematics, if you know this toolbox, these basics, you could work in any place. Any place in banks.
That's really good advice. And I guess, closing thoughts and recommendations. I guess just hearing more from your personal experience, is there a particular accomplishment or project from your career that you're particularly proud of and would like to share with the audience? Something that you kind of encapsulate in those that's lasted time, that will be at the bank for as long as possible, or maybe it's a moment from your consulting career.
Of course. I mean, when you create models, let's say rate, I work in a bank that the credit side of the bank is very good. The credit book is really, really big. And all the credit side is based on three parameters. I say the probability of default, the rate that is, and the rate that is mapped to that probability of default, the LGD and EAD. But the ratings of your clients are really the pillar of your bank. If you are good creating that ratings, if you create a model for that ratings that is really fits well, all the banks are going to assign a probability of default for the client that was created by you. No, so I will repeat this. All the clients in the bank has a probability of default.
Of course,
if you create a model, you will be in each transaction of the bank.
Because are you saying that banks right now are looking outside for these rating models? Are they not developing them in-house?
No, they depending on which portfolio and depending of if you have internal or external defaults, you could use your own PD models or external PD models, and also depending on the size of your bank. That's really and also because it's more complex, because if you are in a standard approach or internal model-based approach, you will create your own models, or maybe you will use for capital another kind of model. Okay, but that's very complex. But in my job, I create things that my spirit is in any part of the bank. Nobody knows, but I know, and that's really good, because for the people it has an input.
Yes,
but
of course.
In that value, it's my soul. That's really great. I remember I had just an anecdote when I was in consultant. We program calculators, okay, to price derivatives, and we sell that to different banks. And when we did simulations, we have the root is in English, of the simulation should be a fixed value if you need to be the audit, right? If you are selling audit tools, you should be able to use a fixed root to kind of have traceability of that simulation, okay? So we use our names in the in the root that nobody knows, but my name is in a lot of calculators that are anywhere.
That have been distributed. Within the bank you're talking about now.
My name, but not my name is just in like Octavio. It's my name with different kind of of code, that yes.
Subscript something.
Subscript
Yeah.
something. And that was in my past when I work in the consultant industry. We sell calculator to some clients.
Oh, so you're proud of your calculators that are now sitting with this wide, diverse range of clients, all the way
Yes,
from
and nobody knows. That's really good. That's really good. When you create models, the model will last with your client for a lot of time.
as long as you're building stuff that's good value, well
Mhm.
documented, as you said.
Of
Oh,
That's really important. The documentation, the documentation is a key part in our job, because when we program, we need to be really good documenting our code, our script. If not, the guy that is going to be behind of you will not understand that. So you will need really be good at documenting this. And also your model need to be really documented, your assumptions, anything,
I
your
think that's
test,
I think that's
anything.
really important, and that's something that I learned. Yeah, in the first couple of years, I was kind of like, oh well, I'll keep everything I'm working on siloed in this box. I want to show my boss how good I am compared to the analyst next to me. But that's really the wrong approach. I've found throughout my career. It's so much better to focus on actually doing yourself out of the job. You want to be so good at your job and document all the processes so well, list all the assumptions out that you could be replaced tomorrow. And then that, people kind of have fear of that documentation. You do yourself out of the job. Well, it actually gives you more free time to work on more interesting problems and then potentially advance in your career.
That's correct. Yeah. Also, the capability to reuse your code, so you reuse part of your models. Let's say again, the example of Markov change. We use the Markov change in a lot of different models. If we create this in Python, the objects, right? If we are object-oriented programming. Okay, if we create an object that do this and it's well documented, then the next guy that need to use this tool will just use my code. So
Yeah.
if you have a repository that is really clean, that is really well documented, then we need to do the things just one time.
Saves a lot of resources, doesn't it?
That's
Yeah.
the toolbox. Instead of being in my head, now it's a repository in Python, in GitHub, in whatever. Nowadays you have a lot of different places, but in any repository you will have all the codes, and that's teamwork. It's really teamwork. And then, as is object-oriented programming, you need just to create another object that will inherit that object. But it's already done. So that's really fantastic. Really fantastic.
The
And we are
code
always improving our last version. That's really good. Yeah.
And that does sound really good. So yeah, using code repositories and making sure that you're making all your comments and listing all your assumptions.
Yeah.
So I guess to conclude, what actionable advice or final thoughts do you have for the young professionals, students who are listening to us today, to actually follow a similar career path as you? We spoke about before that you kind of started from economics and you weren't in quant finance, but you were motivated having had that experience in China, and you went back and you studied. So you're not starting as someone who started off as an Ivy League school and you went down the process and you got picked up by a quant firm straight away. You're someone who's been starting down the path potentially like a lot of our listeners. So to that person, to yourself, when you first started out, what advice would you give to them to follow a similar career path?
I will say that it will be very, very hard. That's true. If you came from an economic career, it will be really hard. Never give up. That's really true. Never give up. It will really hard because in economics we don't have the enough background, but it's really worthy. It's really worthy. Uh, Try always to learn new approaches. Try always to think out of the box, and try to understand the whole picture, where you stand. Okay, because we're always going to evolve. So we are now a quant of this portfolio, but maybe tomorrow for another portfolio, and tomorrow maybe the CEO of the bank. I don't know, but we need to understand the whole picture. The whole picture. If we understand the whole picture, let's say interest rate models, we need to understand the whole framework of interest rate model, and then we calibrate the curve. You know, and then we have IVOR project. I don't know if anyone knows, but it's some 2 or 3 years ago, our risk-free rates change from in advance interest rate to in arrears interest rates. Let's say that how they fix change. Okay, that was really important change in the industry. But if we don't understand the whole picture, we'll never be able to understand how this will impact in different kind of the bank. So for me, that's the main advice is never give up. It will be really hard, but it's really worthy. And once you have this toolbox, it will be really fun. You are always enjoying your job because you are always like playing games, and this is really true. For me, it's just sometimes just like playing games. I am with my music, programming, thinking about a problem, and that's my day-to-day job, and that's really good. Yeah.
Oh, that's fantastic. Well, thank you so much for coming on, Octavio. It was really great to have you.
Thank you. Thank you too. Nice to meet you.